The currency and the banking systems have collapsed in Afghanistan, in Iraq. They're falling and collapsing in Turkey. They've collapsed in Lebanon, in Syria. They're not trustworthy. In Ukraine and in Russia. Now, I've just lassoed about 400 million people. And those 400 million people don't have a currency that they can use as a medium of exchange or a store of value. They don't have banks that they trust that work effectively. It's like if you don't have a property or a currency with which you can store economic energy, that's like being a type 1 diabetic. You cannot store fat on your body. It means that you can eat as much as you want. You will literally starve to death. The value of the currency collapsed in the year. In essence, the Fed printed 40% of all the dollars in existence in the 18 months that followed the pandemic. So when Jerome Powell said, we're not even thinking about raising interest rates, and forecast 4 years of 0% interest, and when the Fed loosened the reserve restrictions on banks and allowed banks to, in essence, print infinite money with no reserve ratio, then the economy was flooded with liquidity. What happened was the stock market immediately recovered. People thought that was something good. It wasn't good. It was the money collapsing. It was the value of the dollar collapsing in real time against scarce assets. So most of the time, if you owned a portfolio of stocks, if you had $1 billion worth of stocks and your portfolio went up by 30%, you would have thought you were a genius in that year for doing what? For staying invested in stocks. Why? Because Jerome Powell printed 30% more money. You had this dichotomy, I think, and the people on one side of the economy thought everything was just fine, and people on the other side of the economy got destroyed. I was sitting in the middle. I had a Main Street company that generated $500 million in revenue and generated cash flow. And I had a $500 million treasury that was sitting in conservative instruments, basically invested in short-dated sovereign debt. Bitcoin is digital property that you can teleport anywhere in space instantly. And it's also perfected property with the lowest maintenance cost. You don't have the property tax you have on a building. You don't have to repaint the thing every 10 years. You don't have to worry about leaks in the roof. So if I could buy $1 billion worth of property and it was in cyberspace, and if you couldn't make any more of it, if I capped it at 21 million city blocks in cyberspace, and if I could hold it for 1,000 years, I might have a better idea than buying a city block in Manhattan or a building in London or even a company. And it's a lot better idea than buying 30,000 pounds worth of gold. Why? Because real estate developers are going to create more buildings, gold miners are going to create more gold, mayors are going to pass a property tax, and they're going to put some kind of enjoinder or some kind of restriction on your rents. Rent control your building. Something, acts of God are going to create earthquakes and floods and lightning strikes. And none of that stuff's happening in cyberspace. So the whole idea of Bitcoin is it's perfected, engineered gold, crypto gold, with none of the defects of gold. You can't mine any more of it. It's weightless. I can move it at the speed of light. It never decomposes. I can break it into 1,000 pieces in a second, send it to 1,000 places, and recompose it, all using a computer program. And I can take personal custody of it. Maybe the most powerful two ideas are, I can hold possession of $1 billion of Bitcoin in my head, just holding a password or a set of private keys. That's a pretty big idea. Maybe the first time in the history of the human race that you can actually take possession of your wealth and take it to the grave with you, or take it anywhere else on earth with you. And even if I put a gun to your head, the most I can do is kill you. I can't take it. Bitcoin is a nuclear hardened protocol. It's pretty much the most robust, resilient thing the human race has yet to invent. For example, it's running on tens of thousands of nodes. You can't even identify the nodes, and there's an identical copy of the Bitcoin ledger on every one of them. So if all of the electricity got shut off everywhere on Earth, and every computer failed everywhere on Earth for 10 years, the protocol just goes dormant for 10 years. And as soon as one person turns one node back on, the entire protocol comes back to life again. It should be pretty obvious why it is right now. When you have a dominant digital monopoly, the digital monopoly eats everything else, and Apple Computer is the most valuable company in the world because Apple Computer is literally the most valuable company in the world. They can ship a product to 1 billion people over the weekend for a nickel, and their competitors can't. So selling the winner to buy the loser is an awful strategy. The only people that made money in the stock market in the last decade were the people that owned FANG. They owned Apple, Amazon, Facebook, Google, Microsoft. There's no diversification here at all. If you're investing in a stable currency, you have to keep in mind that digital monopolies are dominant and they crush everything else, and everything else goes to zero. Give me a diversification strategy for Russian stocks right now. Which of those do you want to own? When the currency collapses, the bonds collapse that are linked to the currency. All the companies that generate cash flows in the currency, they all collapse because they're valued as a stream of cash flows. And if the cash is worthless, how is the company going to be valuable? Right? You sell beef in Argentina, the peso collapses. The people are buying the beef in pesos. So you want to sell the beef to Europeans for euros. The government passes a law keeping you from selling the beef or exporting your beef. Export controls come, wage and price controls come. So the problem is every equity, every piece of debt, every piece of property linked to the currency is correlated to the currency. So your diversification strategy with any given currency, whether it's the peso, the dollar, the euro, the ruble, the lira, the whatever, they're all correlated. So then you're like, okay, well, this is great. I'm just going to buy the dollar. All the currencies are correlated to the dollar, and the dollar's collapsing. So ultimately, the problem with diversification is nearly everything, every stock is correlated, and every conventional asset is generally correlated. The only true diversification is if you find non-sovereign stores of value. Most of the time, these models, inflation is 2% or CPI, and we should say diversified, they're based upon this very conventional wisdom that I live in this safe world and nothing has changed.